What do all these moments have in common? A single breaking news alert, a ripple of fear through the markets, and billions of dollars wiped out in minutes. Welcome to Guide to Wealth, where powerful ideas meet practical action. Today, we're diving into a critical question. How do geopolitical events impact the stock market? And more importantly, how can you, the smart investor, not just survive, but thrive in the chaos? Geopolitical events introduce one deadly ingredient into investing: uncertainty. When the future becomes unclear, the market reacts fast. Take Israel's recent attack. All three major U.S. indexes fell immediately. Oil surged. Why? Because traders fear supply disruptions and economic slowdowns. Here's the surprising part. Market volatility, while scary, can be an investor's best friend. Why? Because in every dip, there's a chance to buy quality companies at a discount, just like a sale in a luxury store. Volatility is equal to opportunity. When others sell in panic, smart investors buy quality at a discount. Sectors like defense, energy, and commodities often outperform during wars. In uncertain times, gold and bonds may shine. Here's the twist. Think of it like this. If the stock market were a mall, geopolitical events are the flash sales. Would you walk out of the mall during a sale? Or would you pick up valuable assets on sale? History teaches us this. Markets get shaken but rarely broken. Let's look at real data. Russia-Ukraine 2022, sharp fall, but recovery began within 3 weeks. Pearl Harbor, 1941, market down nearly 20%, but it recovered in 10 months. And 9/11, stocks dropped 11% but bounced back within a month. Each time, markets stumbled. Investors panicked. Headlines screamed. But here's what few people notice. Despite the fear, the market recovered. Every single time. Because while the market reacts to fear in the short term, it grows on fundamentals in the long term. And those fundamentals are corporate earnings, innovation, interest rates, productivity, not just war headlines. So how do you protect yourself without panicking every time a headline breaks? Let's turn fear into focus with 3 actionable strategies. First strategy. Fight the urge to sell. Short-term dips are normal. Most markets recover within months. Stay calm, stay invested. Temporary shocks caused by geopolitical events can create a sense of panic. However, it's crucial not to hastily sell assets such as stocks. History suggests that the impact of international conflicts on markets is usually short-lived, and markets tend to recover within months following a crisis. Second strategy. Diversify smartly. Different assets, sectors, and even countries. Don't put all your money in one basket, especially in uncertain times. Investing across different asset classes, sectors, and geographies is a proven strategy to buffer against market downturns. By spreading your investments around, you reduce the risk and dependency on any single market dynamic. Third strategy. Think long-term. Zoom out. You're not investing for next week. You're building wealth for the next decade. Despite short-term market volatility due to geopolitical events, maintaining a focus on your long-term investment goals is essential. This perspective can help you avoid locking in temporary losses by selling during times of uncertainty. While no strategy can entirely eliminate the risks associated with geopolitical events, these techniques can help manage and mitigate their potential negative effects on investments. Remember, every investor's situation is unique, so tailor these strategies to fit your specific needs and financial goals. We can't predict when the next crisis will hit, but we can prepare. Because every investor's superpower isn't prediction, it's discipline. Let's not forget what Warren Buffett said. Be fearful when others are greedy, and greedy when others are fearful. In 2008, Buffett invested billions during the financial crisis. In 2020, while markets crashed due to COVID, he stayed the course. You can too. Because the greatest investors understand volatility is not the enemy. It is the emotion. So next time the world shakes, remember, markets move fast, but wisdom moves steady. Stay calm. Stay invested. And let history be your guide. So the next time a geopolitical headline rocks the news, don't let fear drive your decisions. Let history, strategy, and discipline guide you. At Guide to Wealth, we believe in turning global chaos into personal clarity. Because true wealth isn't about timing the market. It's about time-in the market. Stay diversified. Stay calm. Stay informed. And always remember, every crisis holds a lesson. Every dip hides an opportunity. Subscribe for more strategies, stories, and financial wisdom, and share with someone who needs this. Because your journey to wealth begins with clarity.